All right, so you all seen what we're looking at today, right? This is pretty intense stuff. It's April 3rd, 2025. And things are, well, they're not looking so hot in the markets.
No, no, not at all.
And all of today's news really seems to be pointing in one direction.
President Trump and those tariffs.
Yeah, exactly. He went ahead and actually implemented those new trade tariffs.
Yeah.
And we've got a whole bunch of stuff to go through today. We've got news summaries. We've got analyses of what's happening in the markets. And we're going to really try to take a deep dive into this.
Absolutely.
So you know what's really remarkable to me is how huge the market reaction has been.
Oh, yeah. It's immediate.
It's like almost a COVID-level shock to the system.
Yeah, I've seen some analysts even drawing that parallel.
Really?
Yeah.
Wow.
Yeah, it's a major event.
So where do we even begin to unpack this?
Well, I think the first thing that really jumps out is just how quickly and how broadly the markets have reacted.
Yeah.
This isn't just like a little tremor in one sector, This is a widespread sell-off. It's like the entire, financial landscape is kind of reassessing the risk here. And I think the through line is clear.
Yeah.
These trade policies, these tariffs, that's what's driving this.
Okay, so let's dive into that.
Yeah.
April 3rd, 2025, huge downturn across the board, right?
Right.
In the financial markets. And as you said, it's all connected back to these tariffs. It's like the markets just went and everybody hit the sell button at the same time.
It's pretty much what it looks like, yeah. I mean, investors are interpreting this as a major negative event,
Right.
a big change, and they're trying to price in all these potential consequences, like higher costs, disruptions in supply chains, ultimately slower growth. It's a big deal.
Okay, so give us some of the specifics. Like, how bad are we talking?
Pretty bad.
Yeah.
The Dow Jones, that's a good place to start.
Okay, the Dow.
So that took a huge plunge. I mean, we're talking about losses exceeding 1,000 points, even getting close to 1,700 in some reports.
Wow.
Yeah, and that translates to roughly a 4% drop, which is a massive single-day move.
Yeah, you don't see that every day.
No, not at all. And for the Dow, an index like that,
Yeah.
I mean, that's a strong signal.
Really strong.
That investors are worried. They're thinking something bad is happening, something that's going to have real consequences.
And then we look at the S&P 500. Even bigger percentage decrease.
Yeah.
Largest single-day fall since March 2020. Around 4.8%.
Yeah. And you know that date, March 2020?
I mean, the beginning of COVID.
Right. That's when the pandemic really started to hit the markets. And to see that parallel being drawn today, it really shows you how serious this is.
Yeah, it's like flashing red lights everywhere.
Pretty much. And the S&P 500, that represents a much broader slice of the economy than the Dow.
Right.
So this isn't just about a few big companies taking a hit.
It's across the board.
Yeah.
Wow. Okay. But maybe the most shocking numbers are coming from the tech sector.
Oh, yeah.
The Nasdaq, it got absolutely hammered. We're looking at a drop of around 6%. And some sources are saying this could be the biggest single-day percentage drop the Nasdaq has ever seen.
Ever.
Like ever. Ever.
Yeah, and that's saying something.
What's going on there? What's hitting tech and growth stocks especially hard?
Well, I think the market understands that, a lot of these tech companies,
Mm-hmm.
they rely on global trade.
Okay.
Their supply chains, their customers, it's all international. And these tariffs, they introduce friction, they increase costs.
Make it harder to do business.
Exactly. So investors are looking at that and they're thinking, okay, these companies are going to be more vulnerable to these trade barriers than other sectors.
Right.
So they're selling, and that's driving the price down.
Okay, so it's not just the big guys, though, right?
Yeah.
The Russell 2000, which tracks those smaller companies,
Right.
that also saw huge losses, like 6.6%.
Yeah.
So it's really rippling outwards.
Absolutely. And small companies, they often have less wiggle room.
Okay.
They can't absorb these increased costs as easily as the big corporations.
Right. They don't have the same kind of resources.
Exactly. So they might be even more vulnerable to the negative effects of these tariffs. So when you see the Russell 2000 dropping that much,
Yeah.
it's a sign that there's a lot of concern about the entire economy, not just the big players.
Okay, so we've got all this chaos in the stock market, but then there's this weird opposite reaction happening over in the bond market.
Right.
There's a rally. What's going on there?
Yeah, it's called a flight to safety, and it's kind of a classic move when investors get nervous.
Okay.
So think about it like this. When things get shaky in the stock market,
Yeah.
people start looking for safer places to put their money. And that's often government bonds.
Okay.
Because even if the economy tanks, the government is still going to pay back its debts.
Right.
So bonds become more attractive, demand goes up, prices go up, and yields go down. So the fact that we're seeing stocks drop and bonds rise at the same time, it's like a giant flashing sign that the market is worried.
Worried that these tariffs could really mess things up. Okay, so stocks and bonds, we get that. What about commodities? We saw some movement there too, right?
Yeah, crude oil actually went down.
Interesting. So how does that fit into all of this?
Well, oil is really sensitive to global demand.
Okay.
And if these tariffs disrupt international trade, which they're designed to do in many ways, that could lead to slower economic activity worldwide.
Less demand for oil.
Exactly. So this drop in oil prices could be an early warning sign that the global economy is headed for a slowdown.
Okay, so the markets are definitely freaking out, but what about actual businesses? What are they doing?
Yeah, well, it's interesting because we've got this backdrop of the tariffs, and then at the same time, we've got all these other company-specific things happening.
Right, like it's not a vacuum.
Exactly.
There's other stuff going on.
Right. For example, Tesla. They reported a drop in deliveries for the first quarter. Now, that's mostly being blamed on slowing demand for electric vehicles and, all the drama with Elon Musk.
Sure.
But it does add to this sense that there are already challenges in certain sectors.
Okay.
And now the tariffs are coming in and adding another layer of complexity.
Especially for industries like autos that are so global, right?
Absolutely. It's like adding fuel to the fire.
Yeah. But then you've got something like OpenAI getting a $40 billion funding round.
Yeah, that was huge.
They're now worth more than McDonald's and Chevron. It's like a totally different economic reality.
Yeah, it shows that even with all the uncertainty, there are still areas of the economy that are booming.
Okay.
Like AI, that's clearly a hot sector, so it's not all doom and gloom. There are still bright spots.
So even with the tariffs,
Yeah.
some things are just going to keep chugging along.
It seems that way.
Okay.
Oh.
And then there's this whole Amazon TikTok thing.
Oh, yeah, that was another big one.
Potentially a massive acquisition. What's going on there?
Well, it looks like Amazon might be making a play to buy TikTok.
Wow.
It's a huge strategic move, and it kind of shows you that these big companies are playing their own game, Right.
They're thinking long term. They're looking at the big picture.
So the tariffs might not even be on their radar.
Well, they're probably aware of them, but it's not going to derail their plans entirely.
Okay, so some companies are making big moves regardless of what's happening with the tariffs, but then we're also starting to see some direct responses to these tariffs.
Right.
And this one really stands out. One of the major automakers, I think they're saying it's Stellantis now.
Right.
They're actually pausing production at some of their plants in Mexico and Canada. And they're laying off 900 U.S. workers, even with the USMCA in place.
Yeah, that's a big deal. I mean, the USMCA, the whole point was to make trade smoother between the U.S., Mexico, and Canada.
Right.
But even with that, this automaker is feeling the pinch of these tariffs. So it shows you that these tariffs are having a real impact. They're disrupting those supply chains, and they're already costing people their jobs.
Wow. Okay. But then on the flip side, we hear that General Motors, GM, they're actually going to increase truck production in the U.S. Interesting. So it sounds like they're trying to turn this to their advantage.
Maybe, yeah.
It could be a way to capitalize on the tariffs, bring more production back to the U.S., become more competitive. So it's not all negative. There might be some winners in this.
Okay. And then you have Tesla saying, yeah, the tariffs are a risk in the short term, but we're not changing our long-term outlook.
Right.
So many different reactions from companies in the same industry.
Yeah, it just goes to show that there's no one-size-fits-all response. Every company is different. They have different supply chains, different strategies.
So it's going to be interesting to see how this all plays out.
Absolutely.
Okay, let's switch gears a bit. Let's talk about the overall economy. The Atlanta Fed's GDP Now forecast, they actually improved their outlook for the first quarter of 2025.
Right.
They're now projecting a contraction of negative 2.80% instead of negative 3.70%.
Yeah.
But that was before the tariffs hit, right?
Right, exactly. These forecasts are always based on past data, so they can be a bit slow to catch up to big changes.
It's like a huge new tariff regime.
Exactly. So, the market's reaction is probably a better indicator of what's to come. And that's not looking so good.
Okay, so growth is a concern. What about inflation? We saw some signs that it was easing back in February, but these tariffs could change all that.
Yeah, that's a big worry because tariffs are essentially a tax on imported goods.
Okay.
And businesses are going to pass those costs on to consumers, which means higher prices.
And we already saw in that New York Fed survey showing that Americans are expecting long-term inflation to rise.
Right.
So even before the tariffs, people were already bracing for higher prices.
And now this is just going to make it worse.
Okay, and then to add to that, UBS is estimating that these tariffs could push inflation close to 5%.
Yeah,
That's a big number.
it is, and that brings up the specter of stagflation.
Stagflation. Remind us what that is again.
So stagflation is when you have slow economic growth combined with high inflation. It's a really tough situation to be in because the usual tools to fight inflation, like raising interest rates, so they can actually make the growth problem worse.
Right, it's a catch-22.
Exactly.
Okay, so stagflation is a worry. What about the labor market? What are we seeing there?
So it's a mixed bag right now. There's one report suggesting that hiring is slowing down, and that's partly due to the uncertainty around the tariffs.
Okay.
And we're also seeing reports of job cuts in the federal government. The Department of Government Efficiency, DOGE, their layoffs apparently hit pandemic highs in March.
Wow.
Yeah, not good.
So those are signs that the labor market might be weakening.
It could be, yeah.
Yeah.
Something to watch closely.
But then there's this other report showing strong job additions in the U.S.
Right.
So how do we square those two things?
Well, economic data often lags behind real-time events.
Okay.
So those job additions probably reflect the pre-tariff economy. It's going to take some time for the full effects of these tariffs to show up in the data. So we need to be patient and see what happens over the next few months.
Okay, so lots of uncertainty there. Now let's look internationally. The reaction to these tariffs has been pretty negative, right?
Oh, yeah. It's been a global backlash.
Really?
Yeah. China is already threatening retaliation, which could escalate into a full-blown trade war.
Between the U.S. and China. That sounds bad.
Yeah, it's potentially disastrous for the global economy. And it's not just China. A lot of key U.S. allies are criticizing these tariffs.
Like who?
Well, Australia, they called the tariffs unwarranted. Italy called them wrong. And there are reports that many other countries are thinking about retaliating too.
Wow.
Yeah, it's getting serious. Even some big investors are warning that this could get out of control. They're urging everyone to work together to resolve this before it gets even worse.
So it sounds like there's a lot of anxiety about this.
Well, for good reason.
Okay, so let's get back to these tariffs. It's not just a simple tax, right?
No, it's a whole system, different rates, different timelines, different targets. It's pretty complicated.
Okay, break it down for us.
So there's a baseline tariff of 10% that's going to hit almost all imports starting April 5th.
Okay.
But then on top of that, there are these reciprocal tariffs that are aimed at specific countries like China.
Okay.
And those rates are much higher. They can go from 11% to even over 50%. And those kick in on April 9th.
Wow.
Yeah. And then there's the auto industry, which is getting hit particularly hard.
Okay, we saw that.
25% tariff on all imported cars starting April 3rd, the same day as the announcement.
Wow.
And then in May, they're going to hit imported auto parts with tariffs as well.
So basically, they're trying to make it a lot more expensive to buy foreign cars and parts.
Exactly.
Okay, but I thought there were some exemptions to all of this.
Yeah, there are. Some things are excluded, like goods that already have tariffs under Section 232, things like steel and aluminum. And goods that fall under the USMCA, they're exempt from the new global and reciprocal tariffs. But that still leaves a huge amount of stuff that's going to be hit with these tariffs. It's going to be a mess for businesses to figure out.
And the economists are not happy about this, right? They're using some pretty strong language to describe what could happen.
Yeah, we're talking about self-inflicted economic catastrophe and warnings that this is unconditionally bad for U.S. banks. And a lot of them are saying this could lead to a global recession.
That's scary stuff.
It is.
And former Vice President Pence is saying these tariffs could cost the average American family an extra $3,500 per year.
Yeah, and UBS is projecting a potential 2% hit to U.S. GDP growth. On top of that, almost 5% inflation we talked about.
Oof.
So yeah, this could have a real impact on people's wallets and the overall economy.
Okay. And we saw that immediate impact in the stock market, especially auto stocks.
Right, they took a big hit as soon as those tariffs were announced.
So what now? This whole thing feels incredibly complex and unpredictable.
Yeah, and that's part of the problem. All this uncertainty is bad for business. It makes companies hesitant to invest and plan for the future.
So what does all this mean for you, the listener? What do you need to know about how this might affect your personal finances?
Well, the bottom line is you're probably going to start seeing higher prices on a lot of the things you buy.
Okay.
That 10% universal tariff on imported goods, that's going to affect everything from electronics to clothes to furniture.
And cars, right.
Oh, yeah. Cars are going to get hit hard. We're talking about price increases that could range from a few $1,000s to, in some cases, over $20,000 for imported vehicles.
Ouch.
Yeah, not great.
Okay. Now, we did see mortgage rates tick down a bit in some of the reports. But is that really good news, or should we be cautious?
I'd say caution is definitely warranted. That dip in mortgage rates could just be a short-term thing. If inflation really takes off because of these tariffs,
Yeah.
the Fed might have to raise interest rates, and that would push mortgage rates back up.
So don't get too excited about lower mortgage rates just yet.
Exactly.
Okay. And what about investments? A lot of people are probably feeling pretty anxious about their portfolios right now.
Yeah, it's understandable. My advice would be don't panic. Don't make any rash decisions.
Okay.
Now might be a good time to talk to a financial advisor, someone who can help you navigate this uncertainty and make sure your investments are aligned with your long-term goals.
Makes sense.
And it's important to understand the difference between a market correction, which is normal, and a bear market, which is a more prolonged downturn. So don't freak out at every little dip.
Right.
Keep a cool head.
Okay. Any potential bright spots in all of this? Like, are there any companies or sectors that might actually do well because of the tariffs?
Well, it's early, but it looks like discount retailers might be a good bet.
Okay.
Companies like TJX and Ross stores, they're holding up pretty well so far. They might actually benefit from these supply chain disruptions.
Okay. How so?
Well, they could get access to more discounted merchandise.
Right.
And if consumers are looking for cheaper options because of all the price increases, they might turn to these discount stores.
So they could see a boost in sales.
Potentially, yeah. It's something to watch.
Okay. So as we wrap up this deep dive, what's the main takeaway here?
Well, I think the main takeaway is that these tariffs are a big deal.
Yeah.
The markets have reacted strongly. There's a lot of uncertainty, and there's a real risk of a global trade war.
Right. And inflation is a big concern.
Absolutely. And we're still in the early stages of this, so it's hard to say exactly how it's all going to play out.
Yeah. A lot of unknowns.
But it's definitely something we need to keep a close eye on.
So for all of you listening, I want you to think about this. These tariffs, they're not just about prices going up at the store. They're potentially about a fundamental shift in how the global economy works. So think about it. How might this change the way goods are made and traded around the world? How might it affect your life in ways you haven't even considered yet? This is just the beginning of a very complex story, and we're all going to be living through it together.
Yeah, it's a lot to take in.
It is. All right, that's it for our deep dive today. Thanks for listening, everyone.
Thanks, everyone.
We'll be back soon to keep you updated on all the latest developments.